Hey everyone, and welcome back. You know how much we love getting our hands dirty with some company filings here? And today we're diving headfirst into the world of Envestnet.
Oh, yes.
We've
Invest.
got excerpts from their annual reports 2020, 2022, and 2023.
Excellent.
And you know me,
Oh,
I
yes.
always say there's nothing quite like reading a company's own words, their own narrative. It's like getting the peek behind the curtain, right?
Absolutely. Annual reports, they're more than just numbers. They're a company's way of telling their story, framing their successes, and maybe, just maybe, downplaying their challenges a little bit, wouldn't you say?
For sure, for sure. They control the message, which is why we're here to unpack it all.
I love it. Let's get into it.
So Envestnet, for those who don't know, they're a major player in the wealth management software space, right?
Yeah.
Helping financial advisors manage billions and billions of dollars in client assets.
A lot of zeros involved.
Oh yeah, big money. But let's rewind a bit. Back to 2020, the year the world went a little haywire.
Oh, tell me about it. The pandemic threw everything for a loop.
Chaos. But Envestnet, in their 2020 report, they come out swinging, talking about record trade volume, how they upped their client service game despite everything, even improved it, while everyone's trying to figure out this whole working from home thing. What'd you make of that when you read it?
Well, two things struck me. First, it speaks to a certain agility, right? Being able to adapt quickly to a crisis. But also, maybe they even benefited from the market volatility. Think about it. When things get uncertain, people trade more, right?
Makes sense.
So their trading volumes go up, and it plays into this narrative of success. And then on top of that, they emphasize improved client service during a global pandemic.
Yeah, interesting.
Almost like they saw an opportunity to really solidify those client relationships, be the steady hand in a storm.
We're all in this together kind of vibe.
Exactly.
But okay, here's where things get a little, shall we say, curious. They dedicate a whole section to employee support, which, fantastic.
Always good to see.
Right. But then you look at their charitable giving, and it's surprisingly low, both in 2019 and 2020. Even with a special $5,000 donation in memory of their former CEO, it makes you go, okay.
Yeah, it's a head scratcher for sure.
Huh.
Are they prioritizing internal programs over external social impact? Maybe. It's not necessarily a bad thing, but it's something to consider when evaluating their values, wouldn't you say?
Definitely something to note. Now, let's be honest. No annual report is complete without the obligatory risks and challenges section, right? Always got to have that.
Got to keep it real, right?
Right. And for investment in 2020, they zero in on one thing: migrating clients to their platform. They basically say, if they don't get this right, if these migrations go sideways, it could be a real problem.
And they'd be right to be concerned. In this business, technology is everything. Imagine you're an advisor, you've got all your client data, portfolios, everything riding on the software, and suddenly there are glitches, delays, lost information. It can be a disaster.
Oh yeah, talk about a nightmare.
Right. So, Envestnet's emphasis on this risk, it shows they understand what's at stake. They know how crucial a smooth technological experience is for their clients.
Absolutely, it's make or break in their world. All right, let's fast forward a bit to 2022. New year, new leadership, and a whole lot of changes. What jumped out at you?
Well, the first thing, obviously, is the new CEO, Bill Krager. New leadership often means a new direction, a change in priorities.
New sheriff in town.
Exactly. And then, on top of that, they bring in some serious heavy hitters for the board. Gail Crowell, with her tech background, Gregory Smith from the financial world. You don't just bring in people like that unless you're planning something big.
It's like assembling a dream team.
Exactly. So it really makes you wonder what they're building towards.
Yeah, what's the grand plan? Now, here's another interesting tidbit from that 2022 report. The actual number of financial advisors using their platform, it went down.
Down. Which is kind of wild when you think about it, because they also mentioned that the total number of client accounts actually went up.
Hold on. So fewer advisors, but more client accounts? That's fascinating.
Right. It's like they're trading quality for quantity, maybe. And to make things even more intriguing, they really play up the growth of independent advice channels in this report, almost like they're shifting their focus. So less advisors overall, more clients, and the spotlight on the independent advisor. What's your gut telling you? Well, my gut says they're tuning into a larger industry shift to the rise of fee-based advice. See, instead of earning commissions on each trade, more and more advisors are charging fees based on the total assets they manage. We're talking AUM, assets under management. And independent advisors, they're often at the forefront of this trend, serving a wider base of clients, often with, maybe slightly smaller portfolios.
So, by focusing on independent advisors, Envestnet might be trying to position themselves to ride that fee-based wave, tapping into a market that's all about managing lots of assets, even if it means working with a different type of advisor.
Exactly. It's a smart move, potentially, but not without risks. The competition in the independent advisor space is fierce. Envestnet needs to offer something truly compelling if they want to stand out from the crowd.
They got to bring their A game.
Hmm.
Okay, one more thing from 2022 that I got to get your take on. The appearance of an activist investor, Impactive Capital. They waltz in, nominate 4 board members, and suddenly everyone's a little on edge.
Yes. Activist investors
Yeah.
always makes things interesting, right?
They sure do. But for those of us who maybe didn't go to Wall Street for our MBAs, break it down. Why are activist investors such a big deal?
Okay, picture this. An activist investor, they're like the shake-up crew of the financial world, right? They buy up a sizable chunk of a company's stock, and then they use that ownership power to push for changes they believe will boost the company's value.
Okay, so they're not just passively holding stock. They're trying to, steer the ship.
Exactly. Sometimes they want cost cutting, sometimes they're pushing for a sale or a merger. It really depends on their strategy. With Envestnet, it wasn't immediately clear what their end game was, but they certainly made their presence known.
They definitely got everyone's attention. So 2022 was a bit of a roller coaster, wouldn't you say? New leadership, activist investors, shifting market dynamics. It's like they're juggling chainsaws while riding a unicycle.
A very apt analogy. It's a lot to keep track of, that's for sure. But it makes for a fascinating case study.
It's like they walked right into the boardroom and said, all right, listen up, we've got some ideas.
Right, and everyone's like, oh, what's about to happen? Now, on top of all that, there's this whole issue of goodwill impairment in the 2022 report. Investors always watch that line pretty closely.
Goodwill impairment. See, this is where I need your help.
What?
What is that exactly? Sounds ominous.
Okay, so imagine a company buys another company, right? And they pay a little bit more than what the company's assets are worth on paper. That extra amount, it's often considered goodwill, things like brand value, customer relationships, all that good stuff. But if the acquired company doesn't perform as well as expected, that goodwill can lose its value and the company has to write it down. That's goodwill impairment. And in Envestnet's case, their goodwill makes up a pretty significant portion of their total assets.
So it's kind of like you buy a fancy vintage car at an auction,
Yeah.
thinking you got a steal, but then you realize it needs a whole new engine and transmission.
That's a perfect analogy.
And for Envestnet, if that goodwill takes a hit, it's not just a financial ouch. It's investors saying, uh-oh, maybe those acquisitions weren't such a good idea after all.
Exactly. It raises a lot of questions about their overall strategy.
Gotcha. So 2022 was eventful, to say the least. But let's move on to the 2023 report. One thing that stood out to me was how much they talked about broader industry trends, specifically the whole shift towards fee-based advice and managed accounts. They're really trying to position themselves as being at the forefront of that.
Oh, absolutely. And they even give you some numbers to back it up, like how 64% of affluent investors are open to paying for financial advice in 2023 compared to just 53% back in 2018. It's a clear sign that the industry is changing, and they want everyone to know they're on board.
They're like, hey, we're the cool kids, we get it. But, of course, we have to ask, right? Are they actually walking the walk, or is this just a lot of talk?
That's the big question. It's interesting, though. They claim their organic AUM growth rate has been double the industry average, which, if that's true, suggests they are doing something right.
Okay, so they're putting up some numbers.
Yeah.
That's always a good sign. But yeah, we got to dig deeper. Speaking of digging deeper, remember that in-person advisor summit they were so proud of in the 2023 report? The one that supposedly boosted their professional services revenue.
Yeah, it's a bit of a throwback, right? In a world that's becoming increasingly digital, they went old school and actually brought people together.
Right. Sure, Zoom calls are convenient, but nothing beats some good old-fashioned face-to-face time with your financial advisor platform provider. It's an interesting strategy for sure. But then, on the flip side, they also mentioned increased severance expenses due to workforce reductions.
Yeah, it's a classic case of give and take, right? On the one hand, they're investing in client engagement, building those personal relationships. But on the other hand, they're potentially streamlining operations, maybe even cutting costs. Makes you wonder what their top priorities really are.
It's like they're trying to walk this tightrope, trying to balance all these different priorities without falling off. And then just when you think you've got a handle on things, bam, the auditor throws in a curveball.
Oh, you mean that critical audit matter? Yeah, that definitely caught my eye. Not exactly the kind of thing you want to see in an annual report.
Okay, time for another jargon breakdown. For those of us who don't speak fluent accounting, what does a critical audit matter even mean?
Basically, it means the auditor found something that made them go, that's not quite right. In Envestnet's case, it was about their IT systems and how they're tracking revenue. The auditor was basically like, hey, we need more proof that you're recording everything accurately.
So it's like your friend saying they ran a marathon, but they can't show you any pictures or medals.
Exactly. It's not necessarily a smoking gun, but it does raise some
Yeah,
eyebrows.
it's that little seed of doubt. And speaking of things that raise doubt, remember those activist investors we were talking about earlier, Impactive Capital? The ones who swooped in back in 2022 with their own board nominees. Well, in the 2023 report, guess what? They're back.
Oh no, what did they do?
They didn't just come back, they came back with a vengeance. They managed to get 3 of their nominees elected to the board.
Wow, they weren't messing around. That's a huge win for them.
Right. They've officially got a seat at the table now, a voice in Envestnet's future. Which honestly makes the whole story even more interesting, wouldn't you say?
Oh, absolutely. This is better than a financial thriller.
I know, right? And to top it all off, at the very end of the 2023 report, there's this bombshell announcement. Bill Krager, the CEO who literally just took over in 2022, he's stepping down.
He's out. Are you serious?
Gone. It seemed so sudden, but the report called it a planned transition. He'll stay on as a senior advisor, but still. Yeah. It makes you wonder what's really going on behind closed doors, you know?
It's like a game of chess, and just when you think you've figured out the players' strategies, they make a move that changes everything.
Right. And in this game, the stakes are high. So we've got Envestnet, a company at a crossroads. They're facing internal changes, external pressures, and an industry that's in the midst of a major transformation. It's a lot to take in. What's the key takeaway for our listeners here? What should they be thinking about after diving into all of this with us?
Feels like we've spent the last hour piecing together a puzzle, you know? We've got these little glimpses into Envestnet's journey over the past few years, the ups, the downs, and, how they're trying to navigate this whole crazy world of wealth management.
And like any good puzzle, right, it's not always a clear picture. Some pieces are missing. We might have to, use our imaginations a little. Exactly. We can't just look at the pieces we have. We got to think about the missing ones, too. And that's where our awesome listeners come in, right? We've laid out the board, highlighted some of the key details, those things that make you go, interesting. Now it's up to you all to connect the dots, figure out what it all means.
It's like